Hello, ladies and gentlemen. This is your captain speaking. It is 14th of February 2018, St. Valentine's Day, and it is now 1:21 p.m. CET, Central European Time. We keep on with our coverage of the SPX 500. Last week, I promised you an update on the evolution of the SPX 500. I it took a bit of time to me to make this update available, because actually we haven't still arrived to the levels I planned we will arrive. But let's go step by step and see what we have nowadays. So as you can see, last 2 weeks, there were a lot of red candles across the board, and this curve here is a 20 daily standard moving average. As you can see, we broke it, but then the price went down, so the 20 daily moving average has not been back tested yet. And actually this is one of my scenarios on a shorter term. We can notice that the 20 daily standard moving average right now is around 2750 zone on SPX. So if we go to shorter time frames, as you remember, last time we met was somewhere around here. We said that if price starts doing something like this, zigzag, zigzag, then we had one zigzag up. Now we had another zigzag down. This low here still remains, and now I think we may have another zigzag up as well, which probably has not finished yet. So this means we have two options, and actually well, we obviously have more options, but I think the main scenario is the following. The first one is that this is a triangle, so we could see a lot of we could see a first wave down, which would be around here, then this flat correction, and 1, 2, 3, 4, 5. So this is wave, all this move down is a wave 3, and now this, so this area here is a wave 4, and this is a wave 4 in a triangle. So quite a wide triangle, as you can see, but still perfectly valid. Where the triangle, normally the triangles should be, if I apply Fibonacci grid here, it should be somewhere between 78.6 and 88.6 retracement from the from each other. So this is a downslope triangle, so obviously this would be the base of a triangle, flat base, and we should locally top somewhere inside this cluster between the 78 and 88.6 retracement areas. That's why I don't have a grid here, but I have this reversal, this local reversal cluster. I painted in blue. So obviously this is our first option. If this is valid, as you can see, I always say if then. So the if then formula is really important in trading. You should just have the scenario, plan your trade in advance. So if the triangle is confirmed, so we probably don't go above this reversal cluster ideally, and of course in any case we cannot go above this top. So the cancellation, the scenario cancellation level is here, is around 2726. So if we go above this level, even if we only spike over it and then the price goes down, then this triangle is cancelled, and we should have and we should search for a different option. However, if the triangle is confirmed, then we should measure the price like this. So that would be, oh, excuse me, I'll just use this color better. So that would be our preliminary target. So the preliminary target of the triangle breakdown here lies around 23.22. So more or less like this. If I go to higher time frame, maybe 4 hours, it's good, we can see that there is a huge reversal zone. So market spent here a lot of time. It spent here in this almost 2400. Yes, it reached 2400 actually. So between 2400 and 2317, 2320, so an 80-point range, which took almost 2.5 months to be broken. It's a very important reversal cluster. That's why I also put a first resistance level here on 2377, because as you see, it is also a strong reversal level. Maybe I should put another one here on 2400, because as you can see, price reached it once, twice, then 3 times, and then 3rd time, well, 4th time lucky this time. It broke the level, back tested it here, went down again, back tested it again, and then finally we saw that sort of a parabolic roll we had in the last months. So let's say this zone here between 24 and 23 would be my reversal zone, so somewhere where I would look again for bullish trades if, once again, this triangle is confirmed. The alternative scenario is that this is not a triangle, so I just keep it here because I don't know if my main scenario remains that this has been a corrective wave in the form of a triangle. So if this is not a triangle, then we will probably go to backtest. As you remember, we said previously that on approximately at 2756, so somewhere here, yes, somewhere there was a 20 standard moving average on a daily time frame. I painted it red, so I also highlight this level on red. As you can see, this is also a sort of a reversal zone. So price reached it, then it went down, and then finally it broke it. It has not backtested it though, so as you can see, price just went higher. It's just run away from that reversal level. So when price runs away from the reversal levels, it just breaks them without backtesting. Normally, at some point of time, it goes back to these levels. In our case, it's not only got back, but it broke it down, back tested it again, and went much lower. So now we are getting back again to this reversal level. I would expect the price to reverse, to backtest the 20 daily standard moving average, which is obviously now a huge resistance. Before it was support, so now it's resistance. And in order to confirm the bullish aspirations, I believe that the price has to break and backtest the 20 standard moving average on a daily time frame. I removed 2 previous reversal clusters because they have already been in play. The same I will do with this reversal cluster, so I'll just remove it from the screen. And now I have this reversal cluster here, because here I can also see that price came back to that level, so probably it is somehow important. It came back here and came back here, so more probably this is a former support which can also be back tested. That will be my alternative scenario. So we go here, we go to that level, to from 2750 to approximately 2770, 75, so on, and then we have another leg down. As you can see, I'm not let's say the bullish scenario when we go to the new all-time high values is not on place for me. Why? Because here there was no bullish impulse. It looks like a correction. So the correction, we keep on in a correction. We didn't have the bullish run. We haven't had the bullish run yet. It hasn't yet started. And because of the form of the price. So someone may say price is basing. Yes, I agree with this, because this support level looks pretty solid, but I don't see many bulls coming into many bulls buying, so many people buying on that price. We obviously see huge volatility. We have seen it during last couple of weeks, so last week and what's been of this week. But you know, when you have a approximately 10% drop, so we can even measure it. Yes, should be the price range. I believe it will give me the percentage of a drop. So we had a 12% drop from the all-time highs values in a very short time. So it was really 2-3 days of or 4 days of a flush, of a real flush. So when we have a very short time flush and then we go back again, it is normal we back test. So we've already recovered a 7% of it. So we went 7% up, then we went 7% down, and now we are climbing higher again. It is normal volatility in that case, in the case we are having nowadays. To make a summary, I do not expect new all-time highs from this, you know, from the current run. So from this run here, doesn't look like it wants to set the all-time highs. In order to set the new all-time highs, the only possibility I see is that price really shoots up now. So let's imagine that these hourly candles we set last Friday just before closing the weeks. So these, well, 3 large candles are wave number 1. It gave us, so as you can see, in 3 hours we made 4%. So price climbed 4% in only 3 hours. Volatility is here. Someone may say S&P is going in a Bitcoin mode, and you know, these who say that will be completely right. This is a really Bitcoin mode for the SPX. So if this is wave 1, then we are having a very similar thing to which we had before a flush. So a sort of a running flat correction, which, well, it will not be the best correction to trace. It will be a very little orthodoxal, but it will be probably completely valid, because notice here that here we didn't have that, you know, these red candles. We did have some red candles like this one, well, here also, more or less, but we didn't have anything like this. And then after having these red candles here, we had something like this. So a sort of an expanding running flat, which is really a bit difficult to trade for the Elliott wavers, because it doesn't have it doesn't have a perfect shape at all. But as you can see, we had a very similar structure to what we may phase now. So if this is a running flat, I expect something, well, not a running flat, not an orthodoxal running flat, but a sort of a flat correction. But I would expect something like A, B, C, D, maybe a small wave E, and then a really, really, really huge, I'll try to paint it for you. For a second, I'll find the accurate instrument for that. Okay, let's try with this. So something like this. Very, very green. Maybe, oh, excuse me, that wouldn't work. So maybe even driving us to the new all-time highs value. So not only reaching the previous highs, so the previous this zone, let's say, which would also be a sort of a reversal zone, but just driving us through to the new all-time high, then a small correction, and the run continues. Is that an option? Yes, but I would say it's like 10% of probability. So we may still want to have one more leg down, which is my main scenario. Summarizing, finally, I will keep monitoring closely these levels. In case we go over them, back test them. So we just break this reversal zone, back test it in, and then run higher. I will obviously I will go for an intraday buy, because from here we can do almost 40 or 50 SPX points up, which for me would be a good gain, especially for an intraday trading. Otherwise, if even we break it, but then I will see that we go lower, I will sell with a stop loss above this high and targeting the way down, maybe 2400, 2300 zone. So let's keep on watching. Let's see what happens to the market. As always, everything that you've just seen and heard is not an invitation to trade. It's only my thoughts about the possible price evolution. So if you will trade it, you will obviously do it on your own risk, and unfortunately I won't hold this responsibility for you. So take a lot of care, trade well, don't forget to set the stop losses over above significant support and resistance level. Due to the high intraday volatility we've seen in the last couple of weeks, I would suggest, well, at least on my trades, I will set stop losses maybe of 1% or so. So they can make huge gains, but also the losses can be a little bit bigger. I think that's all for now. Trade well, take care, and we should see each other very soon on a new update.